Hello and welcome to my channel, The Quality Investor. With earnings season in full swing, I will be providing commentary on some of my holdings and assessing whether they still meet my investment thesis. Today, Tesla, ticker TSLA, released their Q3 2023 earnings. Tesla, in my view, had a mixed quarter. On the earnings call, Elon Musk seemed a bit muted compared to last quarter's call, where he was a lot more jovial. The main discussion on the call did center around the Cybertruck and vehicle deliveries. I won't break down the details of the call here. There are other channels doing a great job with that. I just want to provide a little bit of commentary on some of the numbers given in the earnings release. Before diving into those numbers though, my investment thesis for Tesla is simple. Tesla is by far the leading electric vehicle manufacturer, and that first mover's advantage gives them a strong head start in the race to electric vehicle supremacy. Point 2, their manufacturing process is leading edge and continues to increase in efficiency and reduce cost of goods sold. Point 3, they have an interesting and innovative product pipeline with the first Cybertruck deliveries expected by November 2023, along with FSD or full self-driving capability enhancements, robotaxi, Optimus, and more. Point 4, the three previous points making up my investment thesis is enough to create a strong economic moat. However, the biggest point that creates an impenetrable economic moat is the brand. The Tesla brand is extremely strong, and customers love the Tesla vehicles they drive. The strength of the Tesla brand reminds me of the brand strength and loyalty of Apple's iPhone. It is that good. And my final point is Elon Musk. I am betting on Elon. I believe he's a true visionary, and I think he will build Tesla into a fortress and blow away the competition with his initiatives he is pushing at Tesla right now. All right, let's get into the earnings. But first, if you like content like this, please hit that like button and subscribe to the channel. All right, so on the surface of everything, the Tesla earnings report was pretty bad. And Elon didn't do himself any favors on the earnings call. You can see here that they closed the day out at 242.68, down nearly 5% on the day. And that was before the earnings were released. And then after the close, once the earnings released, they kind of trended up a little bit, and then the call started, and you can see here they're down quite a bit. They're down 4% after market close, so we'll see what happens tomorrow. But again, it doesn't look good on the surface. I mean, you can see too, like, all right, so September 2023 earnings per share, they missed by nearly 10% from Wall Street analysts, and on revenue they missed by 3.2% by Wall Street analysts. They were expecting 73 cents a share. It came in at 66 cents a share, and revenue was expected at 24.1 billion, where it came in at 23.35 billion. And of course, things didn't get helped by the margins. You can see their total GAAP gross margin came in this quarter at 17.9%, well down from a year ago at 25.1%. Their operating margin 7.6%, well down from a year ago at 17.2%. So they didn't seem to help themselves at all. But that's on the surface. Like I said, it was a mixed earnings report. A lot of bad, but there was some good to look at as well. The first bit of good I want to point out is in the first sentence of the summary here, it says our main objectives remained unchanged in Q3 2023, reducing cost per vehicle. And that was one of the main things in my investment thesis was their leading edge manufacturing process and their ability to reduce the costs of their manufacturing process. And so that's what they did. So our cost of goods sold per vehicle decreased to $37,500 in Q3, while production costs at our new factories remain higher than our established factories. We have implemented necessary upgrades in Q3 to enable further unit cost reductions. We continue to believe that an industry leader needs to be a cost leader. So they're going to continue as they get better, get their software is going to improve, their manufacturing process improve. They're going to continue to reduce their cost of goods sold. And that is a big part of the investment thesis. And really, that's why Tesla is a very long-term play. You're going to get some value pops here and there, and you're going to get some pretty large declines in the short term. But ultimately, 10 years from now, they're going to be a much more valuable company. So I think the main driver for the reduction in gross margin, first off, is a reduced average selling price due to the pricing and mix. So remember a few months ago, Tesla announced they were reducing the sticker price of some of their cars, and that's one reason why you're going to see that squeeze in gross profit margin. A lot of that is to drive more volume. And for operating margin here, we see an increase in operating expenses driven by the Cybertruck AI and other R&D products. So of course, and Elon stated this as well, if you're going to be increasing your research and development and making more investments into like the AI and those types of things, as well as getting those factories revamped for a leaner production going forward, that's going to increase your operating costs, and that's going to lower your operating margins. So digging into a little bit, not great, but a little bit of a silver lining there. The other aspect to all of this is we have to consider the macro environment right now. I'm not big on macro noise. Generally, I'm a very buy and hold long-term investor. However, let's be honest. In a very high interest rate environment that we're in right now, products that require financing will suffer and decline in sales. That's the bottom line. And Tesla's no different. They're suffering downturn a little bit in their sales due to the fact that the interest rates right now are some of the highest they've been in a generation. So Tesla's feeling that pain as well. And we can see that here. So while their deliveries on a year-over-year basis, they're up 435 this year versus this quarter versus last quarter, a year ago quarter, 343. They're down quarter over quarter. And again, that's going to be due to the macro environment in general. Another good piece of news here that I want to point out is their market share of Tesla vehicles by region. You can see the US-Canada region here. That market share has been steadily increasing. And it went up again quarter over quarter and clearly year over year. So while their deliveries slowed down a bit, and of course that squeezed their margins quite a bit, they're gaining market share. And that is what you want to see in a company that's widening their economic moat, and Tesla's doing just that. In another chart here that further demonstrates Tesla's stated goal of reducing their cost of goods sold, look at that cost of goods sold per vehicle of the last 5 quarters. It popped a little bit in Q4 2022, but it's been declining quite a bit since then. So that's positive right there, and we want to continue to see that number coming down. A couple more charts here. So we see this chart is vehicle deliveries in the last few quarters here. It's gone up pretty consistently. You see that dip here in Q3 2023. And then, of course, operating cash flow. They're still a growth company. They're still in the initial phases of their growth, and they're going to be in this for a few more years. So this is going to be kind of all over the map. But look at the last 3 quarters. It's increased. Their operating cash flow has. And they stated, too, that they've increased their capital expenditure a little bit. So it makes sense that their free cash flow dipped a little bit this quarter. And, of course, the net income coming down a bit. Again, that's due to a lot of the problems I already talked about. Just the macro environment in general is not helping Tesla nor anybody out there right now. So all in all, this was not the best quarter Tesla's ever had. However, there was some silver linings in there with their increased market share, as well as they're getting those cost of goods sold down a little bit. But my long-term thesis remains unchanged. I think that Tesla's going to continually improve, continually deliver more and more great vehicles out there, increase that market share, and be the leader in electric vehicles for the foreseeable future. I don't see any of the other startups really catching them anytime soon in the next 10 to 15 years. And as a long-term investor in Tesla, I will just sit back and watch my capital grow. So thank you for watching today's video. And I do want to remind you that this is not financial advice, and I do own Tesla, but I do want to know what you think. Please comment below and let me know your thoughts. Do you have any other opinions on what the earnings for Tesla was today? Let me know. Also, please hit that like button, and if you found this info helpful, subscribe to the channel and join our community. Thank you, and happy investing.